Hello friends, welcome! Today, we are going to dive into the most mysterious and perhaps the most fascinating subject of the stock market. I want to start by asking you a question. Do you think markets really move randomly? Are those red and green candles going up and down on your screen purely the product of chaos? Or, within that chaos, is there a hidden rhythm and order that we cannot see with the naked eye? Today, I'm going to tell you the story of the man who gave a world-shaking answer to this question in the 1930s. Ralph Nelson Elliott. Think about it. How did a man who started his career as an ordinary accountant go down in financial history by decoding how human behavior reflects on prices? Why is the wave theory he introduced to the financial world still considered the holy grail for traders almost a century later? Sit back. Today, we will discover the order within the chaos. Our story begins in the 1930s, during those dark years of the Great Depression. Ralph Nelson Elliott is suffering from serious health issues at the time and is forced to retire. During the long, painful recovery period he spends at home, he doesn't have much to do, so he starts spending his time examining stock market charts. He looks at those paper strips and price movements for hours, days, months, and one day, he notices something. Within these price movements that appear completely chaotic and irregular at first glance, there is actually an unerring order. Markets create a constantly repeating rhythm based on human emotions of fear and greed. At a time when everyone on Wall Street was saying, "The market is random, you never know what it will do," Elliott, alone in his room, constructed this revolutionary sentence. Prices are rhythmic and measured, just like waves in nature. This discovery was the great spark that laid the psychological foundations of the technical analysis we know today. Elliott wave theory was born right there, in that quiet room. So, what is the essence of this theory? What is Elliott trying to tell us? The logic is actually very simple but equally deep. According to Elliott, markets breathe in an 8-wave cycle. Yes, you heard that right, the market has a breath. 5 waves up, 3 waves down. In other words, an expansion and a correction. The first 5 waves move in the direction of the trend. We call these impulse waves. Waves 1, 3, and 5 carry the price forward. The intermediate 2 and 4 are short pauses. What happens next? The market gets tired, and that famous 3-wave correction moving against the trend begins. Waves A, B, and C. When this 5 plus 3 structure is completed, one cycle ends and a new one begins. But here is the most fascinating part. These cycles are fractal. That is, if you look inside a large wave with a microscope, you will see the same 5 and 3 structures there too. Just like looking at a broccoli or a snowflake, the part is the same as the whole. That's why Elliott says, the market repeats itself, but no repetition is exactly the same. Now let's come to my favorite part, the psychology. Because Elliott understood very well that charts are not just lines, but a photograph of human emotions. Let's see what happens inside these waves in a bull market scenario together. Wave 1. The brave minority takes the stage. The market is at the bottom, no one believes in it, but smart money starts buying. Wave 2. This is the period of doubt. Price drops a bit, everyone says, "See, it's falling again, this was just a reaction." But those old lows are not breached. Wave 3, this is where the show begins. The masses wake up, news turns positive, price takes off like a rocket. There is no panic, there is euphoria. This is usually the strongest and longest wave. Wave 4, the exhaustion phase. Profit-taking comes in, price rests a bit, volume drops. Wave 5, and the finale, the moment when even the taxi driver on the street is talking about stocks, when everyone believes the end of the movie has actually arrived. And then comes the ABC correction, facing reality, disappointment, and prices returning to normal. As you can see, what we call a chart is actually the mathematical trace of fear, hope, and greed. Speaking of mathematics, Elliott theory doesn't just say, "I think it will be like this." Behind it lies nature's mathematics, the Fibonacci numbers. Elliott realized that prices didn't stop at random places when rising or falling. Everything was working according to the golden ratio. For example, a wave 2 coming after a rise usually retraced 61.8% of that initial rise. That enthusiastic wave 3, on the other hand, often extended exactly 1.618 times the length of wave 1. These ratios are not coincidences, friends. This is the market's law of energy. The rise and fall of price happens with a specific rhythm and ratio, just like the beating of your heart. So, how are we going to use this theory? In other words, how does Ralph Nelson Elliott make us money? Elliott didn't just analyze, he wrote the trading rules for this business. Let me tell you a few secrets used by professionals today. First and most importantly, catching the third wave. Those who strike gold in the stock market are those who catch this third wave. When the wave 2 pullback ends, that is, when it hits that 61.8% golden ratio, you take the position. You put your stop right below it and wait for that massive wave 3 rise. This is the trade with the most tremendous risk-reward ratio. Second, alternation, meaning the rule of alternation. If wave 2 is a very sharp and sudden drop, wave 4 is usually more sideways, more wearing. What is the use of knowing this? If wave 2 was sharp, you don't sell early and leave during wave 4. You are patient, because you know it is a time correction. And finally, a warning, ending diagonal. Elliott says, ending diagonal is the market's last breath. If the price is squeezing at the top of wave 5, taking the shape of a wedge, and volume is dropping, run. The trend is over. Don't let what I'm telling you sound like just theory. Elliott proved this personally. The year is 1938. While everyone is arguing about what the market will do, Elliott sends a telegram regarding the Dow Jones Index and says, the current decline has retraced 61.8% of the rise. The coming third wave will now carry the market to exactly 1.618 times that, to 194 points. Do you know what the result was? The market went exactly where he said, a bullseye. And this didn't just happen in 1938. Open the Bitcoin chart today and look. In that legendary rise starting from the 2015 bottom, Bitcoin made its first impulse, pulled back 61.8%, and then went to that famous $20,000 peak in 2017 with a third wave of exactly 1.618 ratio. Times change, technology changes, but the ratios never change. Of course, things have become a bit easier today. Now we have artificial intelligence, TradingView, complex algorithms. These tools can scan thousands of charts in seconds and count Elliott waves. But remember, the modern indicators, RSIs and MACDs we use are still based on these principles. When measuring the strength of the trend, we are essentially still asking Elliott's question, is this wave 3 or wave 5? So, no matter how much technology advances, the fundamental principle is the same. The trend is 5 steps, the correction is 3 steps. To wrap it up, friends, Ralph Nelson Elliott didn't just leave us a technical tool. He left us a philosophy that would change our perspective on the market. To him, the market was not a chaotic battlefield, but a mirror of nature. Elliott says, the market is not chaotic, it is rhythmic. Its rhythm is the rhythm of life itself. Just as we breathe in and out, just as ocean waves hit the shore and recede, prices obey the same law of nature. Elliott left us in 1948, but the waves he discovered continue to live on our screens today. Because even if markets change, even if instruments change, human nature has never changed. Our fears, our hopes, our greed are always the same. As Ralph Nelson Elliott said, price is the heartbeat of man. When you learn to hear that heartbeat, you will no longer see chaos when you look at the screen. You will see the rhythm. Thank you for listening. Goodbye until the next episode, where we will solve another mystery of the market.